How's it going out there? It's May 26th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. You know, social media is like the devil's gift to the world. Seriously. I mean, it gives everyone the opportunity to say whatever they want. Unless you're Donald Trump or don't believe in the BS COVID narrative being pitched by our government since last March. Can't say anything about that. Now saying that COVID may have been created in a lab in Wuhan. They're saying that now. I mean, Fauci said that. I don't know if you remember, people got banned from social media for suggesting that. I'm talking about leading scientists. There were scientists that worked on that project that came out, whistleblower. I mean, they suppressed all this. You weren't allowed to say that. Which is insane, right? Because if we look from common sense, just let's take common sense, forget about what side you're on or whatever. There's always arguments. But this thing started spreading like crazy in Wuhan in December and then in January. Even earlier than that, but that's when with December, we finally realized it. And the best infectious doctors, scientists all over the world said, hey, China, listen, we'll go to Wuhan. We want to learn about this new virus, how to contain it, how to save lives. Let us help you. Because we've never seen anything like this before. It was really cool. I mean, it wasn't just like CDC or who. It was, countries all over the world. And what did China say? They said, we don't need your help. We don't want you to come here. So they didn't allow the CDC in. They didn't allow the World Health Organization in. They said, no, we don't want you to come. We don't need any help at all. And this was in January. We don't need any help. So it means the CDC and the World Health Organization came out and said how great China contained the situation, how great, even though they had no clue. They weren't allowed. They weren't allowed in China. They weren't allowed there. I mean, if something was spreading here, killing people, we couldn't figure out why. Why not invite the world's leading scientists to come here and figure it out? Makes sense. Why did that happen? Apparently, you didn't want the help because the mission was obviously to infect the world. That had to be the mission. Since you knew how contagious this disease was right off the bat, you closed Wuhan to the rest of China. You didn't let anyone in to know about it, but you did allow residents from Wuhan. They couldn't travel to the rest of China, but they could travel around the world. And that's how this thing spread everywhere, which led to 3.5 million people dying, including 600,000 Americans. I remember posting a lot about this and on COVID, much earlier than anyone else because I don't want to say I'm fortunate, but I was interviewing people on lockdown through this podcast, Wall Street Unplugged, in Italy and in China as well. People quarantining in China, a couple of friends that I interviewed, they told me how it was, how crazy it was. They knew it was coming here. I mean, just, having access to the right source of information really helped us, not just with the market's perspective, but, telling people, hey, this is serious. You got to watch out. This is coming to the U.S. I know it sounded crazy in January and even in February until they started closing everything. I mean, talking about this before, Johns Hopkins started collecting statistics through their website. Now it's the standard everyone uses to get their COVID statistics from. But I remember getting ripped for talking about this. And some people's accounts, they actually got banned. This is including doctors, scientists who offered their opinion on solutions and even remedies that could work to treat COVID that they saw with patients. No. Can't say that. No, you're not. We don't want to hear from you. I've said this numerous times. I can't tell you how many doctors listen to this podcast. Doctors in stock, they love stocks. They love investing. And they're aggressive investors, most of them. But I can't tell you how many doctors have sent me amazing information of what they're seeing in the field at their hospitals. Some of them run leading hospitals around the country, and all of them were like, just don't use my name. Are you kidding me? I get why they're saying that, but imagine that you are trying to help people and save lives, and nobody wants to hear from you. When you're looking at what's going on here, I mean, for me, getting ripped for telling people there's no science behind 6-foot distancing early on, or mask, how they slow the spread of the virus, which is now being updated to be true. I mean, this is 16 months after COVID began spreading across America, 16 months after we close all schools. I remember saying this doesn't impact children. Look at the statistics. All this, it didn't matter. I was getting ripped by a lot of people. And I get it. It depends what source you're listening to that's scaring the hell out of you. But it's amazing how these social media platforms are supposed to be a way for everyone it gives a voice to everyone to express what they're thinking, what they're feeling. But they're not free platforms. This isn't freedom of speech. It's freedom if you believe in a narrative, if you don't, push the limits or anything. But it's really not. They control it. These are companies. I mean, look at Facebook, who makes money by tracking everything you do without having to tell you. Your entire life, your kids' lives, everything, where you go on a vacation, everything. And then sells all this data to third parties and makes a fortune from you. Well, you think, wow, Facebook is cool. And they're watching everything you do. We're all creatures of habit. We all go to vacation at the same time. We drink our coffee at the same time. We go to bed at the same time. We wake up at the same time. Once you figure out exactly what we're doing, where we're going, when we shop, it's not too difficult. And you can blame the people for that and say, hey, I'm checking in Walmart right now or Starbucks right this second. Here I am right now, and taking selfies and, where you are and posting it and liking, hitting everything you like. All that goes into a massive database, and they throw AI on top of that to predict what you're going to do next. And that's incredibly, incredibly valuable to any business in the world. Imagine knowing exactly when your customer, exactly knowing where a customer is looking to buy a financial newsletter that focuses on the crypto industry, and they're looking to buy in the next week. You know how valuable that information is to me? You spend $1 million because I probably generate $3, $4, $5 million just off of that. I don't have to waste my time with getting a whole demographic that I'm not really too sure about. That's why it's such a big deal and why these are the biggest companies in the world. And when it comes to Twitter, which I'm on, and I post a few times a day, I mean, it's a pure hate platform now. It's all hate. These outlets are controlling every aspect of our life. Everyone. This is what we look at. We're on our phones. It's some social media platform. So I tell you, download TikTok. TikTok's the only platform I know that makes me laugh, that makes me feel good. It focuses on the topics I'm looking at. It's not like people getting angry in your face and pissed off. At least I'm laughing and it's fun and it's cool and you're seeing things that, you usually don't see and you can scroll do it right away. It's unbelievable. But a lot of these platforms, just the hate. And how they're controlling every aspect of our lives in every industry, including ours. You don't think so? Look at GameStop. GameStop is at $230 again. Why? Because they're getting into NFTs? Is it that easy? If it's that easy, I think I may announce that. Maybe our stock will go into $10, $20, $30 billion valuation. Even though they're completely late to the party and they know very little about this field. But the stock's surging, 14, 15% today because of that. And what's next? They're going to buy Bitcoin. Then they're going to get into AI. They're going to use all the buzzwords, right? And then they're going to say, you know what? We're going to launch a spaceship. Doesn't matter when. You can do it 50 years from now. We're going to launch a spaceship, AI capabilities, going to be able to post social media. Just put in, it's funny because all these companies put in the buzzwords, right? They put in the buzzwords. They get excited. Doesn't matter about revenues or earnings, right? Look where GameStop is. Look where AMC is. And people really going to movies right now? No. But these names are surging because there's massive campaigns through social media, Reddit, to push these names higher. And take Bitcoin, a sector talking about for 4 years now. It's an industry that we're in. We have our crypto intelligence newsletter. Let's subscribe us to that. And our Curzio equity owners security token, the first ever to launch a security token. It's available on a foreign exchange for retail investors. If you launch a security token today in the U.S., it's almost impossible to get it trading. T0 has a few. Other than that, you can't for retail investors. So I love this industry. I believe in it. I don't believe in the people pumping Bitcoin no matter what the price is, saying you're an idiot if you're not buying it. Just keep buying it. Hold on for dear life. All this stuff, believe it or not, used to be illegal. The SEC would ban you from pumping anything. And they usually fine you after you sell it. It's got to be damages there. There's no damages. Then, if you hold something forever, they got nothing to sue you for because it can go back down. But once you don't know what's going on, who's selling, who's buying, after what they're saying on social media. But so many pumpers. But the SEC would find it and ban all these pumpers immediately. And you say, okay, yes, you do have this stuff, but Bitcoiners claim We're never going to sell. We're holding on for dear life. Newsflash. Someone was freaking selling Bitcoin since it crashed over 40%. Over $1 trillion was wiped off the total market cap of cryptos in what? 2 weeks? Somebody was selling it. I could tell you how many people were pumping it over 50,000. But hey, if you're allowed to pump and dump it, everyone is doing it, then of course everyone's going to follow. Why not? That's what we do. If someone's doing something and benefiting from it, you're going to be like, oh, you know what? I want to do the same thing. Why not? They're doing it. It's like our school system. We have really great teachers, but, and a lot of teachers will admit this, they're good with, we have a lot of shitty teachers too, who barely do the minimum. I see that with my daughter. They don't even put the grades in she gets grades and she got 200s on a test that weren't even put in the system for like 3 to 4 weeks. And it was showing like a C, and then finally put it in, it showed an A. What are you doing? Isn't that your job to put this stuff in the system? But, they're just like, whatever. You ask them questions. They give you one-word answers. They don't want you asking any questions. There's a lot of crappy teachers out there. But you know what? Most get paid the same. I can see some teachers say, I'm working my ass off here, and the person next to me doesn't give a shit. So why should I give up more of my free time? And again, they'll say, well, it's about the kids. And I get it. Those are good teachers. But you could see that, right? You could see that happening. I mean, the system almost promotes you to do less work and also encourages to promote the narrative. Since if you have tenure as a teacher, you can't get fired, right? You can't get fired for almost anything. Almost anything. It allows you to teach classes about whatever you want. White privilege, why capitalism is racism, or whatever. Why do you think these teachers are doing that now? They don't get fired for this. They might have to leave a school or something or go someplace else or whatever, or step down, but they have tenure. They could talk about whatever they want. Forget about the parents. The parents don't know all this stuff. They've been conditioned the last 10 years on all this garbage. Now it's really coming to a head. You can do whatever you want. Why not? That's the system we're in. Now, when it comes to social media, I get it. I get why so many individual investors are going to pump their favorite stocks. Everybody's doing it. It's pumping. This is great. Buy this, buy that. I see it all over Twitter all the time. So I try to follow a lot of people. And then I had my nephew come in. Joe Davide came in, and it was great. We had him interviewed twice, and the first time he said he's doing really well, and then he got crushed on ESG stocks, right? He's 21 years old. And I was asking him, you're down a lot of these stocks. He's like, I'm going to hold them. He's like, I'm holding them. I don't want to lose it. I'm holding them. I'm like, well, that opportunity cost of buying whatever. I mean, it was a great interview. Got lots of great comments on frankcurzioresearch.com. But when I asked him, and said, well, where'd you get these stocks from? Oh, I follow this guy on YouTube. Did he tell you to sell it or tell you what to do? No. So he's telling you where to buy it, but he disappears when you need him most. For me, that would never, ever happen with my services. I mean, that's when you need me the most. That's what you pay me for. When things are going on, I'm not going to send you as many alerts compared to if I'm wrong on something, telling you exactly what to do, because I'm going to be wrong on certain things. Everybody's wrong in this industry sometimes. I got to be right more time than I'm wrong, or no one will listen to this podcast and no one will subscribe to my services. I've been doing a very good job in the portfolios for a very long time throughout my career. I love what I do. But I understand my investors. I understand that they want to know. And most investors, I'm telling you, the emails I get from almost everyone who's a subscriber, a lot of people listen to this, it's always about asking me when a stock is down. It's not like, Frank, here it is. It's like, Frank, what should we do? Should we be selling here? Should we buy more? They just want to be told what to do. That's what they pay for. You don't have that through the social media and all these platforms. I mean, I had a guy, a big influencer, who we were going to have on, and we were planning it. Has a ton of followers. I was going to interview him. And he came back and he said, I don't know if I'm going to have time to do this. Plus, I don't like negativity, so you can't say anything negative. And I'm thinking, like, what the hell is this guy talking about? I'm like, what does he mean saying it? I mean, haven't you done like 1% of research? Whenever I interview a guest, I know every single thing about them and everything they said over the past 6 months. All the interviews they did, everything. That's my job, to vet them, to research, to make sure I'm asking them those questions. And I know the questions I'm asking are probably the questions my audience wants to know the answers to as well. This way I'm educating myself, educating you. That's preparation. A lot of preparation goes into this podcast. A lot. And I love it. I love learning about these people, different investment styles. If they have a different opinion than me, it's fine. It's cool. You're able to back it up. And, that's why we got some amazing guests, one coming up pretty soon. But for this person to not even do one bit of research on anything, that I've been doing podcasts for 14 years, and see how my interviews are, seeing the quality of people that I interview, and him worry about saying, why are you worried about, like, what do you have to hide? That you're saying you worry about me asking negative questions or talking negative? This is the YouTube generation. There it is. I'm going to tell you exactly how to buy stocks, how to make a fortune, but when you get crushed, hey, where are you now? But I could see, like, those individual investors watching these platforms, and they get to pump their favorite stocks on other social media platforms. And they don't have to let anyone know when they're selling them. They could pump them, go higher, get a whole bunch. You're saying, well, it's 1 or 2 people. Reddit has what? Last time I looked, I think it was 7 to 8 million. They might have 10, 12 million Wall Street bets. That's a huge influential crowd that was able to push a stock higher and almost bankrupt. What was it? A $10 billion hedge fund, Melvin Capital, where it needed billions in infusion and cash infusion. You talk about a lot of people, a lot of influence there. Knowing that this person is short, we keep pushing high. He's got no choice but to get out of this thing. It's forced selling. It's going to go higher and higher and higher. But the way the system is set up, it promotes this. It promotes, like, even the people that aren't doing it, where they're watching it, saying, hey, I'm going to do the same thing. It's like people who are unemployed right now. Why would you go back to work when you're making more money staying home? That makes sense, right? You can be pissed off at them, but why would you do that? Most people hate their job. I happen to love my job. But a lot of people hate their job. If you're going to get paid to stay, more money to stay home and do whatever you want, have fun, play video games, go out, exercise, whatever, why wouldn't you do that, right? So it promotes the next person and the next person and the next person to do it. That makes sense to me. What doesn't make sense, and what I never expected to see, maybe I should have, is how professionals are doing the same thing. Talk about billionaires like Elon Musk, Mark Cuban promoting Dogecoin while telling everyone this is a scam. Think about that for a minute. Think about if you could remember, and I know if there's young kids, let's say if there was no social media and you actually did that and said, hey, you went on CNBC 20 years ago and you said, hey, you know what? I like this stock. I think you should buy it even though it's a fraud. You wouldn't be locked up, but you'd probably lose your license. Today, you could say that. You have Musk being able to flip-flop, right? You should have your own opinion, fine, but on Bitcoin, he's like, I'm buying it for Tesla. I'm buying it, using the balance sheet to buy, over $1 billion in Bitcoin. This is great, Bitcoin. What happened to Bitcoin when he announced that? Prices surged. Then he comes out a few weeks later saying Bitcoin uses too much energy. It's not green. Stuff like this is influencing the markets to where Bitcoin was moving 5 to 10% a day over the past few weeks, even 15%. In some days. But holy cow. Think about that. It's crazy. The hedge fund managers bashing Tesla. These are hedge fund managers saying the company's a fraud. Elon Musk is a liar. And they're promoting how every car that crashes in a Tesla is reported like it's an airplane crash. And self-driving technology. You know how many cars have self-driving technology right now that crash? All the cars being rolled out. A lot of high-end, top-of-the-line cars, Cadillac, Escalades, they have similar technology. If they crash, you're not going to hear about it, but you hear about it with Tesla times 10 because they're short. And again, this stuff influences the markets. And as they're saying stuff on social media, you have no idea if these people are buying, selling, still on the name. I look what Tesla did at first. Elon Musk said, we're buying Bitcoin. Bitcoin went through the roof. And then all of a sudden, when they reported quarterly estimates, he said, oh, we sold some of it. We wanted to see if we could sell it. I think that's what he said. We wanted to see if you could sell it. I don't know what that means. You bought it. I'm sure you could sell it. But we all know you sold it. So you were able to book those gains and make the quarterly numbers because of that. So basically, you pumped up Bitcoin, it went up tremendously, and then you sold it and profited for your company. Isn't that pump and dump? But we really have no idea if these people are buying, selling, still in it, whatever. But all of this is illegal. It's illegal in our industry. It's illegal. But on social media, hey, it's perfectly fine. You could do that. Nobody cares. Then we look at these platforms and all the hate on it. I mean, never seen so much. Like, if you meet people in the streets, most people are nice. Most people want to do everything they can to make a better life for their family. I don't care what color, what race. We all have those goals in common, right? Make a better life for our kids, all of us. I mean, you see people hold the door open for it. They say thank you. On social media, forget it. Holy cow. I mean, if you want to be entertained, follow Elon Musk, follow Bitcoin, follow gold. All three of those. Holy cow. I mean, the tweets that you get through those in a post, they're insane. And this is from someone, it's all risky. It's all risky, right? That's it. It's all risky. That's hashtag. This is a real tweet. Because Elon Musk appears to be treating Dogecoin like one of his own companies. He's actively marketing Doge, engaging with the community, and using his engineering and leadership prowess to contribute to Doge development. With Elon as Doge CEO, we are in good hands. You know how terrible that statement is? Elon Musk pumping something that he said is a fraud, and you're saying he's a Doge CEO and he's trying to contribute, which he said, but who knows what they're doing to develop. I don't know what they're developing at Doge. I have no idea. We're in good hands. Which, by the way, you're not allowed to promote your stock as a company if you're a publicly traded company. So the CEO of Coca-Cola can't say, hey, you know what? Everyone should be buying our stock right now. No way. They need analysts to say that. That's where all the money is made. That's why it's all biased. I mean, especially small research investment firms, they're not going to cover a small firm. First they go, hey, you guys going to need to raise money? Great. We want to be on that capital raise. This way we can charge you fees. And you know what? We'll come out with a report and we're going to put a buy rating on you. Okay, deal. Everybody's happy. That's the way the system works. I mean, if these guys call and you say, hey, you know what? I'm not going to raise. There's a reason why companies that don't need to raise money and have no debt in their balance sheet and just have a lot of cash, they don't get a lot of coverage because no one's generating investment fees off of them. That's a system. They need these outlets. They need other people to tell you how great their stock is. But CEO can't say, the company can, hey, now's a great time to buy our stock. Social media, you're allowed to do that. Another tweet, hashtag Kubiko, says maybe, just maybe, Bitcoin is worthless, useless garbage, a fake asset. Worse, the tulips, as tulips you could eat or at least plant in your garden and don't suck up electricity for no reason. If you can eat tulips, but just worthless? Is it worthless? I mean, you have guys like Peter Schiff who destroyed Bitcoin, the Bitcoin crowd over the past 3 weeks. I mean, just look at his Twitter page. I mean, he's got a massive following. He's a great entertainer. Good for him. But he goes out and says, Bitcoin holders beware. In case it has escaped your notice, the long overdue rotation from growth to value has begun. This includes a rotation out of Bitcoin and into gold. Bitcoin has been the epitome of growth over value, as it's all growth and no value. Sell while you can. In a tweet from last month from Schiff, so far in 2021, Bitcoin has lost 97% of its value versus Dogecoin. I don't know what time period, but I don't know. So the market has spoken. Dogecoin is eating Bitcoin. All Bitcoin pumpers who claim Bitcoin is better than gold because its price has risen more than gold's must now concede that Dogecoin is better than Bitcoin. I mean, you know how false that statement is? But you're allowed to post this on Twitter. And for the record, here's Peter Schiff coming out, trashing these people, saying, I told you so. If you look at his track record and you look back to 2018 when this market first started falling, he said it's going to zero. Bitcoin is going to zero. Get out of it. It's fake. That's what he said. And even after this crash, for gold bugs to come out and rag on those Bitcoiners, and some of them deserve it because they were really pumping it at 40, 50, 60. I get it. But really? Like, this is the moment that you're saying, I told you so? Yes, we had a 40% correction in this, but if you look at the numbers, Bitcoin is up 300% in the past 12 months, while gold is up only 50% in the past 5 years. Is this the argument like the gold bugs want to have? And I'm not promoting Twitter. I'm not reporting gold. I'm just telling you, how these platforms are used for so much hate and so much bullshit, and yet nobody cares. It's perfectly fine. I follow Quote the Raven on Twitter. He says, oh, look, we can pull these stupid Bitcoin to gold ratio charts out when Bitcoin is crashing too. Here's Bitcoin versus gold over the past month, and he shows how gold up over the past month. Over the past month, really? You could take any time frame before May, and you're wrong. But you're really going to say over the last month? Another person, special situations on Twitter. It's hashtag special situation. Because Bitcoin got demolished in the last month because a sufficient amount of HODLERs, hold for dear lifers, who bought or acquired it well below the current cost of production, mostly Chinese miners, decided to take profit and bail. Bitcoin should not, under any circumstance, be trading above $25,000 per unit. No research on that. Just, hey, should be trading lower. If that's the case and Bitcoin goes down, maybe it'd be hard to short Bitcoin itself, but there's a lot of pure plays, miners that are stocks now that could easily, they got crushed along with the downturn in Bitcoin. But I just don't get these people, mostly gold bugs, they're bashing like crazy. And the funny thing is here, Bitcoiners are also bashing gold bugs, but these people are so similar, it's a joke. I mean, they're buying both of these asset classes for the same exact reason. Because they don't trust fiat or money that's printed by governments. It's the same thing. Think about it. You look at the basis, and people are going to say, all right, you know what? I'm buying, they both have an argument. You're buying as a hedge against inflation, a store of value, an alternative currency. Those are the three main reasons you see people buy both of those asset classes. And all those reasons come under the same exact umbrella of not trusting fiat. But yet they bash each other, and they hate each other. Why? I mean, it's just, you could own both. And again, look at the Bitcoiners. I could see the gold bugs getting pissed off because Bitcoiners can be in your face sometimes, posting 10 times a day on these social media sites telling you you're a loser for not owning Bitcoin. I get that part. Although, if you're looking at the big names in the industry, guys I interviewed right here at Wall Street Unplugged, Dan Held, Bobby Lee, I mean, these guys own Bitcoin forever. These are big shots. These are legends in the industry. And when I interviewed, they were down to earth and cool. Bobby Lee said he even owns gold. And Dan was like, look, I'm holding Bitcoin forever. But he wasn't bashing people or bashing things. These guys were just, hey, it wasn't on social media. It was a real interview with two legends of the industry. I've interviewed a lot of great names in this space. Huge. But they weren't like pumping or say, you got to buy it or you're crazy. No. You see that a lot on social media, though. Because when it comes to that, it's going to be the death of us. It's a place where the people running these systems are encouraging hate and conflict. They suppress certain information. Why they do that? Because that's what gets people emotional enough to post. It's the reason why when you watch the news, whatever news source, I don't care what side you're on, there's never any happy stories. It's all bashing the other side. Could you believe they said this? Look at this. They're taking away our freedoms. Look at this. Trump's trying to kill America. He's a domestic. Trump's a domestic terrorist. Really? Made a lot of money in the Trump years. I know anyone who had a job made a lot of money in the Trump years because we had lower taxes, lower corporate taxes, had more jobs. I'm not promoting the guy because there's a lot of shit you don't like about him, but come on. And even the Biden administration, it's just back and forth, like just bashing every negative. Why? Because that's what sells. That's what people want to watch. And I had a guy in CNN where they took that off social media immediately, right? Where they secretly taped the guy saying, hey, we're promoting, we make sure we put the death count right on the screen. This way and we're scaring you. This is what we wanted. Like, he's saying that. He's in charge of major component of CNN and content. Are you kidding me? That he's actually saying, we all know, but he's actually saying it on tape, but social media suppressed it. No. We don't want that out. Absolutely not. But when you're looking at a place that encourages, and these are the people that are running the system, they encourage hate and conflict, and again, you're going to get millions, tens of millions, hundreds of millions of people to post all the time. And therefore, that's great for them. They're never going to go out of business. These advertisers are going to pay a fortune. Knows every spending pattern, know exactly what their customer is doing and is going to do in the future, right? You would pay a fortune to that. How do you know the future? AI. You've been on these platforms. When anyone says, if a new company comes out and says, hey, we have AI capabilities, short it. Artificial intelligence is used to monitor data, to look at data over a long period of time. So if you've been on Facebook 3, 4, 5, 6, 7, 8 years, or Google, or all these, they analyze all of these patterns and they come in and they're able to predict what you're going to do next. Why do you think people are paying a fortune? Why do you think these are trillion-dollar companies? Trillion-dollar companies now. They're huge. Why? It's an incredibly valuable asset what they have. It's not going to change. So as investors, just be careful where you get your information from. A lot of these people on social media, they're out for themselves. They're pumping whatever. They have several accounts under different names, trashing whatever they want to trash. If they're shorting stocks, they're going to trash it. Seen that a lot through social media. Now we have Citron saying, hey, we're no longer going short, because they used to post. And then they used to go on CNBC and post on social media as well and say, hey, tomorrow we're coming out with a stock that's worthless. And we're going to uncover the fraud tomorrow. Today, I just loaded up on the freaking thing and shorted the shit out of it, right? Tomorrow, when I go on TV and let you know what it is, and this thing goes down 25% a day, I don't have to tell you if I'm going to buy back that position. I don't have to tell you that. That's illegal. It's going to continue. And that's a big surprise to me, is how even the experts, most influential people who are billionaires, great success stories, at least in my field, are joining the pump and dumpers. Are you kidding me? It's definitely not a good thing. And look what it's resulted. Look what it's resulted in. You have Elon Musk tweeting about Bitcoin, an influential person. And what is he doing? He's moving, or capable of moving $100 billion in and out of an asset in minutes. Hundreds of billions of dollars have changed hands because of a simple tweet. Where's the SEC? I mean, it's too late now. It's spread so wide. What do you do? You don't have capabilities. You don't have enough people there. Which is crazy. And I think I'm going to be interviewing someone very, very high up in the SEC in the coming weeks, just arranging it. Someone that believes in crypto. And these are some of the questions I'm going to ask. The GameStop crowd, the AMCs, yeah, you're making money and everything, but is it on fundamentals? No, it's about a bunch of people just posting as many times as they can and trying to get more and more and more people in these stocks, which again is illegal. And right now the SEC's lost. They can't do anything about it. Anyway, for the record, I like Bitcoin, like a lot of other coins. I'm going to find out Crypto Intelligence newsletter. I like Tesla. About 2-3 weeks ago, I said, look, and the reason why is I looked for a car at the major dealerships because my lease was up. I couldn't find anything. No, there's nothing on the lots, and everyone was like, it's going to take 6 months. If you build your own car online with your own specs or whatever, 6 months minimum because of the chip shortage. But Tesla's the only company in the auto industry that, when I went on their website, and I'm not buying a Tesla, they said they'll deliver it inside of 2 months. I know someone who's waiting 2.5 months and it's getting delivered in the next couple of days. So maybe a little longer, but still much better than 6 months. People want a car. They need a car. Hey, you know what? I'm going to try Tesla. At least I can buy one and have it within 2 months. I have to wait 6 months, maybe. We think it's going to be 4 to 6. We think. We're not sure. Maybe. What are you going to wait? 9 months for the car? You might as well get the next year. The 2022 is going to be out. Are you kidding me? By the time they start shipping these things. And Tesla skyrocketed, right? Up over 100 points. Did well. I never told you to buy Tesla, sell Tesla, whatever. Again, it's something I would never ever short, but I just thought it was a good buying opportunity. The market's helped, came back, but Tesla's doing pretty good. And for the record, I really, really, really love gold right now. I don't care what it did in the past. I don't care if Bitcoiners hate it. I don't care. That's not what I look at. I look at the future. I don't care that gold's up 50% in 5 years. I don't care. What I do know is we have more inflation than we ever seen in this country since the 80s. And Volcker came in and said, okay, we're done with this inflation, and forced a recession, raised rates drastically. Again, rates are a lot higher than they are today, but we're looking at inflation numbers that are very, very high, going higher, much higher than the Fed's mandate, right? Which is 2%. We're at over 4% now on a CPI, which is the gauge created to show almost no inflation ever that the Fed looks at. And even that is showing wild inflation. The Fed says it's going to be temporary. They don't tell you why it's going to be temporary, but it's going to be temporary. So don't worry about it. So now we have massive inflation. And the Fed, that is saying, you know what? Pedal to the metal. Not even thinking of backing off, tapering, lowering rates, nothing. Still buying bonds, nothing. Still injecting money into the system. Crazy. And gold is going to go higher and higher and higher. Wouldn't be surprised, $2,500 by year end, which would make a lot of companies an absolute fortune, since a lot of them are being valued at like $1,600 and $1,500 gold right now. And we're at $1,900. But gold as a sector, guys, probably my biggest holding, and sector-wise, not probably, it is my biggest holding sector-wise. I just added a lot of positions. I continue to add to them. It's being selective. You see a lot of those names around my portfolios. Really, really, really like gold here, along with Tesla, along with Bitcoin, but probably more bullish on gold than anything. And when it comes to gold, uranium, copper, commodities, nobody knows more than this guest. This interview is an awesome one, which, by the way, is being sponsored by blockchain.com, one of the most trusted cryptocurrency platforms in the world, with over 70 million wallets and over 800 billion in transactions since 2011. And you trade for your cryptos on blockchain.com, but you could earn lots of interest, more than 10% annually on your cryptos. That includes Bitcoin, Ethereum, stablecoins like Tether. So for more information, start your account, visit blockchain.com. That's blockchain.com, a service that I personally use. Today's interview is with the one and only Marin Katusa. He's one of your favorite guests, also one of the most controversial, although he's kind of tame during this interview, which I bust his balls about a little bit. But he talks about what he's doing in the gold space, which is surprising. To me, it was surprising. But he's just focusing really on one area, and it's an area that, he doesn't really focus on that much. He usually focuses on another area of it. I don't want to give it away, but it was a surprise. He also talks about where he thinks uranium is going. People love uranium these days. Whenever I report about uranium, do videos on uranium, we get tons and tons and tons of views. I can't believe how many people love uranium, because for the last 10 years, you could do anything on uranium. People didn't care. Now, everybody likes uranium. Let's hear from one of the smartest people in that industry. And he's also going to talk about his next big investment into a space that I love, that's nearly impossible for any investor to buy into. Marin says he's putting more money into this deal, more money than he's ever put into any single deal in his career. So that's why, for me, I pay attention. I saw the name of this. I know what he's doing. It's unbelievable. It's fantastic. And he's going to talk about it during this interview. Also, Marin just launched a new book called The Promise of America. It came out yesterday. I know, I asked him the question, why is a Canadian writing about America? Again, I like to bust his chops. We're very, very good friends. But it was just released yesterday. It's his first interview where he talks about his book, The Promise of America. So you know what? Let's get to that fantastic interview right now. Marin Katusa, thanks so much for coming on again on Wall Street Unplugged. What's up, man?
It's my pleasure, buddy. Not too much.
Well, you got a lot going on, including a new book, which we're going to get to in a little while. But I wanted to have you on because you know all the gold bugs, right? You've been doing this all your life. I know them as well. I was never really an inflation guy. I never really saw the inflation. That argument's been around for such a long time. Yet, if you're looking at the numbers over the past month and a half, they've gotten really scary. Like the CPI is through the roof, and CPI is the gauge that America created to not ever show inflation, right? So that's the one that the Fed looks at, and that's even showing inflation. Everybody's raising price across the board here. It's nuts. What are your thoughts on how this impacts gold? Is gold finally here? Is that the best way to play this? But I want to get your thoughts on it.
As I've been writing, we're going to be in an area what I call crossflation. And you're seeing some massive inflationary pressures and, simple things like copper, lumber, certain commodities are just exploding right now. And from our perspective, when you would come with me some of these sites and I'd be talking about why copper is so critical, and 2-3 years ago, no one cared. Now when these stocks go up, one stock that we wrote up in August was $1.50. It hit $13 the other day. You have to take money off the table. So I'm getting a little uncomfortable with these inflationary pressures because there's no shortage of copper at $5 copper. That's just a fact. You're looking at lumber. I think lumber's got a lot of pent up demand, and manufacturing was kind of pulled back. And the sawmills, you look at what happened in that whole echo period. Many of the sawmills in BC just, shut down. And, the Pacific Northwest, they weren't ready for this massive demand. One thing about our markets is it'll always find a way eventually to meet demand. So that's been proven historically. It'll prove forward. So talking about gold, there's this narrative that we need higher gold prices, and although I wouldn't argue with that, my point is you can find incredible free cash flows. We're at 1885 gold. Like, this is stuff that we dreamed about 5 years ago, Frank. These are incredible value, and yet some of these very big companies are trading at 0.5 times NAV using $1,400 gold. At $1,500 gold, they're trading less than half NAV. So why would I take these risks in a market where, chasing this new commodity that are new companies that are nowhere near getting their permits and risky areas that I'm avoiding? What I'm looking at is true value. And the gold market right now is very compelling.
You bring up a great point when it comes to the large caps, right? In this industry where they're dirt cheap and they're growing tremendously, cash flow's never been positive, more positive, the amount of money that these guys are generating. Also, they produce a lot of copper, right? Which I feel like is not even on the books for them, or not even being modeled right now by the analysts, the sell side analysts. Now, do you think that with the amount of money that they're making and your experience in junior miners, because we do have a shortage of gold, don't we? I mean, it seems like there wasn't a lot of drilling for a very, very long time, but there are some junior miner projects that are really great that specifically, and there's not a lot of them. Are you even venturing into that? Or you're like, you know what, it's not even worth it, like you said, and let me just stick to the large guys because we could generate a lot of money and the risk, on a risk-adjusted basis, it's really the thing to do, right?
Look, some of the companies that I have financed have had incredible runs here. And at that point, you take money off the table. It's not that I don't believe in management. It's not that I don't believe in the project. But if something goes from, $100 million market cap to $1 billion, and those catalysts of, hey, they've made a big discovery here, then the reality portion comes in: permits, feasibility study. We got to go raise the money to build this, and we got to go build it, right? So the big gains have been made in a lot of these juniors. Now they got to do the real stuff to get to that next level. But now, if I look at that next level of these free cash flow companies, they're trading at such big discounts that why do I need to go? Look, it goes back to the uranium days when people would talk about, oh, let's go look for uranium. And I said, why? When you can go buy permitted built things for a third of the cost it would cost to build it. So why take that risk on? And then you still get a 4 or 5 bagger out of it. I get that everyone loves financing a geologist with a dream and a box of crayons, but generally that ends in misery.
You're bringing up uranium. You've been bullish in uranium. You've got me in some deals of uranium a long time ago, and it took longer than expected, but we had 5-year warrants on a lot of these things. What's your view on uranium now? Because for me, I took half off the table, which, was very, very good. And I was a little early. I did about 3-4 months ago. But the reason why I took half off the table is because we know the fundamentals. We know there's huge demand. We know there's not enough supply. Electricity companies are going to come out. They're going to have to buy, but they're not buying for some reason, and the prices aren't going higher right now. They're going higher just by a little bit, which surprises me. So I said, you know what? Let me take half off the table. What is your view on uranium? Because I know you're invested in a lot of these things. Is it the same thing? Hey, these things have run up a lot. You got to take some off the table, or do you think, hey, this is just the beginning of another bull run?
So I actually don't have that many uranium investments, but the ones that I do have are very large positions. Now, I haven't sold any of my position. We recently put out a Katusa free ride on 2 of them. And same thing, the subscribers were in. They've got 300-400% gains. Nothing wrong with taking some cash off the table and having cash to deploy when the opportunity arises. That's how you're successful in this game. For myself personally, I don't think anything's changed in the uranium market. Spot's still $30 per pound. Other than the material coming out of the former Soviet Union, not even the Athabasca Basin in Canada can make money at that number, right? So again, be super selective. I don't think anything's changed in the near term, and stick with the best teams that have world-class assets that are in politically stable jurisdictions. Like, I have zero interest in putting any uranium dollars in an area where, you got to hire security to get to your project. Been there, done that. And here's the flat out truth, guys. It rarely ever works out.
What's your opinion on Northern Dynasty? That's a company that we both share, and we did incredibly, incredibly well because we're just so undervalued. And when you took me on that trip, I think it was like 35 cents. And, before we went, I'm like, I really didn't have high expectations for the company. Then we had management team, Ron Thiessen, all these guys, and we realized a lot of it was just BS, all the environmental concerns. And we came back and everyone was kind of laughing at us at dinner, right? When everyone said, who's the best stock pick? What's the best stock pick you have? Went to a pretty big dinner, a lot of analysts there. And they were laughing at us. And we said, look, this is pretty big. And I think it went up 900%, 1,000%. But now you're seeing, the political stuff. And I'm bringing that up because you just mentioned, like, I'm not going to bother with, going any place that I have to protect myself as guns or whatever. But is that something that you've looked at lately? Because I always get a lot of questions on it. For me, I've avoided it because why deal with that concern when there's so many other good names in the space that you can go into? And it sucks because they do have a good management team. And a lot of that seems like BS to me. It doesn't seem, it is BS, a lot of the environmental concerns.
The interesting thing, I think that project would have done a lot better if Trump actually never did win. Ironically, because of that, though, it got a huge catalytic push in share price because of it. The shorters came on and did the whole, discredit, not needing to use facts. I fought it. We made huge money on it. But I did exactly what I told my subscribers. We took money off the table there and then we eventually sold. That is a management team that are exceptional, but they will have some serious forces against them moving forward. There's ways to make it work moving forward. And the reason why I'm not buying it right now is it's in that legal bind period where it's going to be lawyers going back and forth. And I generally don't like spending time with lawyers. And that's kind of where I'm at with it. The deposit should be mined. It will be mined. The question is when and by who. You don't find pebbles very often. The last world-class discovery like a pebble was one that, you were there in the early days. It started here in my office in Vancouver. It's called Solaris. And Richard Wark and the team that they've done on that. I remember when it was 50 cents and my subscribers got it at 50 cents a share. It's $12, $13 right now in the market. It's been, 20 years from a Solaris to a pebble. You don't find world-class, multi-billion ton, high-grade deposits annually. That happens once a decade. So eventually when the world electrifies and America gets there, technology will bring that into production. It's just, I think right now, just sit back and see. But when it's time, that's a monster.
So, Marin, let me know what a day in the life of Marin Katusa is these days, because usually when I have you on the podcast, you're fired up, ready to go. Now you're like nice and calm and happy. You seem like everything's going real well. Do you still get a lot of deals across your desk and you're just like, listen, I'm not involved, so it's not as stressful? And you're like, look, I'm sticking with the major guys because there's more money to be made there. I have my positions already. I mean, what do you see in the marketplace? I mean, there's always people that want to get funded for everything, not just in your industry and resources, in all industries. Even I get millions of calls and stuff. But what are you seeing these days in terms of, the funding and how you're reacting to that? Are you just, hey, everything's totally off the table when it comes to more speculative things? Or is it just, hey, because you do seem like you're a lot calmer, a lot nicer. I'm surprised, man.
That's just the beard. I think you're just more attracted to me right now. Look, I just put out a book and, people wonder, why would you do it on May 25th? Frank, I had 9 years ago, I had open heart surgery. The first book was a result of staying at home. So I wrote a book in recovery that became a bestseller. And I have some really unique perspectives. And I've reached all my professional goals. I don't do things for a gain anymore. If I don't like the management team, my style. If I truly don't want to be around with these guys, I don't care if it's a quick double, triple, quadruple. I just won't play. I don't. I avoid FTDs, which are financially transmitted diseases. I just stick with the right guys, my Ross Beatties of the world, the Bob Quartermains of the world, the Amir Adanis of the world. I stick with good people. And there's a pattern that I've seen to these guys. You know them. Mm-hmm. And these are guys that, like the Jimmy O'Rourke. I've been partners with this guy for almost 20 years, and it's just a handshake. Olivier Goret. When I first started out, I worked with these guys and I didn't even have an employment contract. It was a handshake deal. When we ran the funds, multi-bit, like talking about a big fund, and we don't even have an employment contract. It's all just that's how I like to roll. You and I, it's a relationship thing. So where am I with that? This book was a very big endeavor. It's over 450 pages, and I've kind of built it all up to prove the math facts all the way. And then the forbidden chapter, which is the end, is probably the thing I'm most proud of in my career, because I've done something that no one's ever done before. And my style, I love being the first to something. It's a way to feed my massive ego. And just the deals that I've done, I'm very happy. Like the last time I was on your show, I was in quarantine by myself for 2 weeks after being away from my family for a week. And I was writing the beginning of the book at that time, Frank. You lock me up into a place. I like to be productive, and I came up with the book. Life's good. Health is good. The portfolio is crushing it. We're doing so well. And I've stuck to my framework of I don't need to go to these super risky places to get big returns. I can actually invest in projects. Like I remember a big Serbian project that I was the first on, run by my very good friend, and we were vacationing at my place. This is even before I was married. I was single at the time. We'd be vacationing at my place on the water, and we'd talking about this project, and the market just had it totally misunderstood. Serbia, oh my God, is there a war going on there? And yet the people are loving. It's a great place to do business. And yet they're willing to give multi-billion-dollar market caps to an area that management can't even go without security and body armor. Like the world is so mispricing risk. And I talk about that in the book. I talk about in our markets today about how, coming risks to the market that nobody is talking about. So I guess to answer your question, Frank, this is a long winding way of I've been there, done it. I've kind of figured the game out. You pick right, you sit tight, follow the best people, and pick your windows. When things are cheap and no one's talking about it, load up. When it's popular, like copper today, or take your some money off the table. And don't forget about those beautiful 5-year Katusa warrants. There's a way of those paying multitudes down the road.
No, and I definitely generate some money off of that. So let's get to your book here. So it's The Rise of America. Surprising, right? I feel like, from resources and writing about everything, but this came as a surprise to me that you were writing this. I'm looking forward. So this is out, guys. You could actually buy this right now. Right, it came out yesterday. And talk about the book a little bit, because from what I gather, it's just there's so much of a negative connotation when it comes to America right now, where just the politics and the separation, all the stuff. And you say, listen, you got to ignore that because America is in a great position right here. Is that I don't know if that's the quick recap, but let's hear it from you.
Yeah, like. Being Canadian, I get this, Trump did so much damage from a non-American's perspective of America. You talk to the average Canadian, Australian, European, they think America is this backwards place, but yet they've not traveled through America. But yet they follow all of the American social media stars and want to live this American lifestyle, right? So there's so much misinformation out there, and I've never seen it so misguided. And and I talk about during the height of the quarantine, and people are like, look how screwed up America is. And I'm like, wait, watch America. America does its best when its back is up against the wall. You go back throughout history, look at what America has survived. You look at what the American innovation has created. And then I break down into the demographics. I break it down into the economics. I break it down from a G2 world, what's going on. And, people think, oh my God, the dollar's trash. What do you want to buy? The won, the yen, the euro, the Canadian dollar? You ask yourself and going, geez, is there ever such information out there? People keep sending me data. Oh, but look at its debt. Have you looked at Canada's debt to GDP? Have you looked at the individual debt levels? Have you looked at the euro? What about the Japan? So when you start looking at these things, and then there's this misconception, Frank, specifically in where I come from, in the resource world, is about how China's the new superpower that's going to dominate everything. And, America's glory days are in the past, and, America's in this MMT. And I say, that's complete nonsense. First of all, America is not at MMT. We're at FMC. It's called Fiscal Monetary Coordination. And guess what? It's not the first time it's happened either. Do you know what built America to the glory days of the 50s and 60s? It was FMC after World War II. And I break it down into all the patterns. what fueled the growth of the expansion to the West, things that built like Hoover Dam and California and all that stuff. It was FMC. And this new industrial revolution that's going to come to America is going to be funded by low cost of capital from FMC. And I know this sounds really, let's all get along and happy dappy. No, man, it's coming from the guy who's the largest independent financier in the commodity sector. Frank, you went with me in, was it 2015 when I made that huge bet on a green energy company that was trading at a 90% discount from where it was trading 4 years earlier. And I was telling you why I was going to put up all this dough. And we look today, it was a six bagger. That's a huge score for a utility. And at the time, the pushback, you supported me in that, and people are like, oh, well, it's not economic. Okay, improvements in costs. The costs are down 90%, decade over decade. And it's going to continue to get cheaper. Yet, there's going to be a huge push into these sectors. And that's why I talk about this crossflation. As, we go electrify, copper is going to be required. But, there's going to be improvements to that. So this whole thesis that copper has to get to $10 to meet the demand. Once Goldman Sachs is jumping on something, Frank, the big money's been made. Okay. So that's all I'm just trying to warn people. And the book will push specifically resource investors. It'll push people's comfort level, but I prove it with a very factual, data-focused approach. And then, it's a big read. It's 450 pages. And my publisher was like, can you make it to 280 pages? I said, no. That's the beauty of being you already have a bestseller. You can kind of dictate terms with the publisher. This is my final book, and it's my framework. And the best part of it is, since I finished it in January, when you write something and you release it to the world, you're always wondering, geez, people are going to attack it. What could I be wrong and this and that? Everything that's coming out from not just the American administration, from the industry, from the unions, coming out of Japan, the EU, it's actually supporting all of these vectors, these catalysts that I've been talking about that are going to really result in the rise of America. The rise of America and the remaking of the world order is showing this evolution that is happening to capitalism. There's capitalism 2.0, which I call stakeholder capitalism. And I really break it all down, Frank, where, the capitalism that our parents knew or what we learned in school, that's over. And how to move forward and how to position yourself to make a fortune from this. That's essentially what I'm trying to do with this book.
It's interesting because when I first saw the title of this, I'm like, wow, you live in Canada. You're writing about America, right? Not that you don't know America, but now listening to you, it does put in perspective, because America is all we do is we complain a lot. We complain a lot. And you travel the world. I travel the world. You travel a lot more than me. And just to put things in perspective of how people get pissed off on their iPhones and their new cars, and they're yelling in traffic and they hate everybody and hate everything. But coming from outside the U.S., actually, I think you can really see that perspective a lot better, because you're in Canada, and explain what's going on in Canada. Because the emails that I get, I mean, it seems like it's easier to go to North Korea than it would be to Canada right now, because it's just so over the top. Which is sad, because I have a lot of friends there. I love speaking at conferences, even your conferences there. But it seems like it's still completely closed. Is that exaggeration? And that probably gives you a good perspective of a lot of great things that are going on in the U.S. compared to, other places that you've been and even live now, right?
So I've always been what I call an independent thinker. I don't do well in big groups because I'll listen to people's nonsense. And I remember in the summer, people are like, they were looking so down upon America. And I was like, what are you talking about? Like the vaccine, and watch America on this. And we're seeing it in real time. And now the average Canadian has their tail between their legs, and they're shocked about these useless bureaucrats and politicians that have disappointed them. The reality, Frank, is yes, you're right. Like, for what I had to go through to book my own plane and bring my geos and engineers to a project, like, you're talking about like a $500,000 commitment for a project. Now, that specific project was worth it for me because I put up so much dough, and I needed to do the due diligence where I felt comfortable, doing what I had to do with my team and everything there, that it was worth it for me. And it worked out great for my subscribers. We made a huge score. But I'm not going to do that for any project. Like, you know that my travel schedule, and you'd never think twice about travel. Now it's got to be really worth it for me. And that in itself is actually a pretty good filter. I'm going to take that approach moving forward, because Pareto's law is so true in investments, where if you just focus on 4% of your stuff, you'll probably still get 2/3 of your returns. But you look at the innovations moving forward in America, you look at where I see things happening from an environmental standpoint, from a carbon credit standpoint, from going a carbon neutral, this coming war on climate. It's going to be declared a climate crisis, and whether you agree with it or not, there's going to be trillions of dollars set towards this, and it's going to be like nothing we have ever seen before. And that's where I keep talking about the forbidden chapter. It's going to shock you. My publisher was like, "Hey, we can't put this in print. Amazon's going to prevent this from people reading it." I expose what Amazon actually does. I expose Walmart. And is it a coincidence that some of America's wealthiest families, guys that have made hundreds of billions of dollars, are the largest facilitators of pollution from China? Those days are over. That's gone unchecked, and it's done. And you're going to see politicians moving forward. Now, as you and I and investors listening to this, if you can position yourself, the gains that you're going to get on this are like unlike anything. And Frank, I've got my pulse on the resources, and look at my track record. I would not be doing this if I didn't think it was an incredible opportunity. And then you get the second order effects. I truly believe that it's going to level the playing field with China. I do believe that you're going to have incredible benefits from an environmental standpoint. And this is a guy who waited 5 years before I invested into green energy companies till it made mathematical sense. That's where we are today in this game. So it's very different, Frank, but I'm quite proud of it.
Now, being in the resource sector, and I know you talk about Ross Beatty when you're talking about the green energy company, and it was interesting because I learned an incredible lesson there because I was scared of green energy back then because nobody could make money off of it. But what I realized is the people that can't make money off of it is because it costs a fortune and decade, if not decades, to actually build. But a lot of the infrastructure is in place. And once in place and you have this stuff, which we saw firsthand from some of these projects, the water is going to come out forever, right? You have wind forever, sun, when it's out, whatever. But it's just once you have the infrastructure built, it's constant. It's generating cash flow forever and ever and ever. And that's where Ross Beatty put that project. Where are you right now at green energy? We're seeing such a move in it. And now we've seen a lot of these names come down, rightly so. They're up 300, 400, 500% just, because Biden got elected. We see a massive push by all of corporate America, right? You look at presentations, I look at presentations, annual, quarterly, they all have like the ESG. This is what we're doing ESG now. They include 4 or 5 pages on it. Where do you see in particular where you can make money in this sector? Because it seems like this is one sector that you've been paying close attention to.
Yeah, look, in March 21st of 2020, I did an emergency alert to my subscribers. I put up huge money personally, and how to play it. And, where I'm at, Frank, and history's proven that it was the right way to go about it. It's all about adjusting your risk. And we bought Brookfield, which is kind of like the Exxon of green energy. It's the world's largest green energy producer. And then in the US, the largest green energy producer in the US is NextEra. And these companies were huge wins for us, multi-baggers. And people will say, well, that I want a 10-bagger. Well, I wish you great luck. I'll put up my 10-bagger list to anybody in the business, but that's not how you do it. You have to look at your risk-adjusted return, and you could buy incredible value and you get 3-4 times your money. You sell half, pay your taxes, you still have half your original position, and it's all free. And these are dividends that I'm going to hold these stocks till my kids give it to their kids. And I just literally wrote a report last month on what exact price am I comfortable buying my next first tranche in specific green energy companies. It all comes down to one phrase in the green energy game, Frank: cost of capital. The bigger you are, like a Brookfield, their cost of capital is lower than, say, a startup. And this is something that I've been talking about for years and years. And maybe I don't do a good job explaining it because math is boring, or maybe I'm just boring. But the point is when you have a lower cost of capital, you said the key phrase. Most of these companies didn't make money, and because there was a higher cost today, in the right region, and just like anything, Frank, not every project is going to work. So you got to do your homework. This isn't high school investing where everyone just wants to get along. You got to make money doing this, or you don't survive. But you look at the cost of capital, and then you look at your returns. The oil guys can't compete with this. And then that's why you see the BPs and Exxons and Chevrons coming out and saying, okay, we want to get in this game. but their cost of capital is too high. The game has changed. That's when I wrote about GBOs, the green barrels of oil equivalent. And I explained this whole thesis back then in 2015 when I first published it, and I keep updating it all the time. The oil patch back in the day could have owned all of North America's green energy for less than 20% dilution. Now the game's turned upside down where the green energy players can own the oil patch for very little dilution. And they can take all of the cash flow from barrels of, dirty oil and fund more green energy. And, the only way to control the destiny of oil is to own it. That's where I'm going to see things happening. And from an economic standpoint, remember, we talked about crossflation. You're going to see deflationary pressures on certain sectors, inflationary pressures on others, and the smart management team are going to take advantage. And it all comes down to cost of capital.
No, good points. Definitely makes sense. So I want to finish up here with some ideas, right? We know that everybody loves ideas and they love having, you usually have ideas. I know you're not into too many small cap. I don't know if you are in junior miners or not, or if there's large cap specific names that you like, but are there any names even in green energy space, or maybe even another commodity that you're looking at that we haven't talked about? Is palladium, if it's silver, we haven't talked about, but something like that you really like or you're looking at with a good management team or something.
Frank, mark my words on this, and I know exactly what your response is going to be. The biggest value commodity moving forward for the next 25 years is not going to be gold. It's not going to be Bitcoin. It's not going to be silver. It's going to be carbon credits. If you're a young person, if you're the Frank Curzio of 25 years ago or the Marin Katusa 25 years ago, and you want to make a substantial net worth, start exploring on how to get into this game of carbon credits. This sector is going to dwarf oil. Oil is the biggest sector on the planet at $2.1 trillion a year. Okay, it's like 5% of the global GDP. Carbon credits, you look at what is happening so far. Of the 5,300 publicly listed North American and European companies with over $1 billion market cap, about just under 9% of them came out with a plan to offset their carbon footprint and a plan to come out with carbon neutral or net zero future by 2030 or 2050. That's less than 10% of the companies. Half of them have to report their S1, which is a scope 1. Frank, in 5 years, the regulators are going to make where your carbon footprint is a liability. And there's a huge growth of opportunity. Companies like Chevron, Shell, BP, Exxon, they're scrambling right now because their cost of capital is too high when the green bond market is the biggest growth, 60% year over year since 2013. And they know they have to go neutral. But how do you go neutral in this? It's outperforming Bitcoin. It's outperforming carbon credits. It's outperforming every commodity on the planet. That's carbon credits. And it's going to continue to go higher. Why? Because it's the ultimate Giffen good. Giffen good is essentially it's non-replaceable. And as the price goes up, the demand for it goes up. There's an IPO coming out that I'm personally going to be the largest investor in, and some of the biggest names in the business, like Ross Beatty, they're participating in the IPO. You get a warrant. That's how you play the game, Frank. That's if you wanted something that no one's talking about, you're talking about a guy who is the largest gold and resource mining financier, independent financier in the world for this stuff. And I'm saying over here is where the puck is going, and that's where I'm putting substantial amount of money.
It's great stuff. And you say you're getting into an investment, but it is kind of hard. Is there specific companies? I know in my field, in security tokens and stuff, there's a couple coming out with carbon credits. I'm very familiar with it just from Al Gore and the amazing job he did, whether you like him or hate him, just building it up and telling you the world's going to end, which it should have ended by now based on his first presentation. The guy made an absolute fortune, right? You got to give it to him. So, is it coming to a point where there's going to be companies that you can invest in through this? Because right now,
I think in 12 to 18 months, it's such a new sector that there's so few companies in it. But I think in 12 to 24 months, you're going to have hundreds of Me Too companies. And again, be very wary when investment bankers and brokers are talking about the sector. You want to be the first in the room, and then you get the best terms when there's no one else in the room. That's how, usually I'm the smartest guy in the room when there's no one else in the room. And that's how I'm able to structure these deals. So that's how I'm going about it, Frank. And you're right. There's very few ways to do it. And that's music to my ears. In 24 months, it's going to be a sector in the market caps of hundreds of billions. And then you're going to be very selective. But we're talking about cash flow today. We're talking about imagine you're able to buy a gold mine that is the largest gold mine in the world, and you're paying $100 per ounce gold, not 1,800, and it's permitted and it's built. It's just nobody knows about this company because they've been doing it privately. And remember that one lesson that a billionaire told you and I while we were on a helicopter, and I think you asked him, what is the number one lesson you've learned in your career? You've had win over win over win. He's made people billions of dollars. And what did he say, Frank? Own as much of the discovery or company you're working on because you can never get it back, right? That's the key. Own as much of it as you can. And that's where in this sector, that's what I'm doing.
No, that makes a lot of sense. Well, Marin, always great stuff. And if someone, and I remember that conversation too, us beating the helicopter, I think, it was fantastic. I mean, we take a lot of helicopter rides together and I think about it. So hopefully they'll open up a little bit more soon, especially in Canada. But if someone wants to get in touch with you, find out more about you, how can they do that, buddy?
My Twitter, or just go to Katusa Research, and I've got tons of information there. And I really hope people read the book because it's something you'll never have read anywhere. And you know my style. I have to be unique. I will never write about something that other people are talking about because that's just noise. This is original thinking in a sector and sectors that are not being discussed, but there's being significant behind the scenes movement. And I really think it's going to challenge people's narrative that I think most people's narratives are wrong.
Well, I'm going to end on this because we do a video now, so a lot of people still listen to this on iTunes. And since you look so good with your beard, I wanted to say, since you wrote this book, I know you got the inside from this person probably, right? Since you look just like him. Who is Ted Cruz? You look like he's a good-looking guy. I'm not putting I like the gray beard. I like the new look, the black shirt. You look good, man. Seriously, you look like a good shape. Like I said earlier,
I thought you were going to say Tom Cruise or someone that, Ted Cruz, really?
No, that's all right. Tom Cruise, maybe next time. But listen,
I'm trying to go for the aging rock star look, not an aging politician.
It's great stuff, buddy. So listen, thank you so much.
You just ruined my day. I'm gonna go home and cry now.
If you're on video, when you see it, people are definitely gonna agree. You look like it, and it's not bad. It's not compared to someone that's bad. It looks pretty funny though. Just the gray and the beard is awesome. So if you get a chance to watch this on Curzio Research YouTube page, definitely do it. And Marin, good luck with your book, The Rise in America: Remaking the World Order. I know it's gonna do great. So I'm really excited for you, man. I know how hard you worked on it, and I'm proud of you, man. That's a pretty big book, lots of pages, and I know it's going to do well, man.
Thank you.
Okay, it's great stuff from Marin. If you get a chance, watch our Curzio Research YouTube page. We have all these videos of the interviews of Daniel and myself when we're on here together myself. It's pretty cool. People like watching it. I like watching it as well. Not myself, but other podcasts and things like that. I kind of like watching them sometimes and listening to them, which I know most of you, based on the downloads, are listening through iTunes. But definitely take a look at it because Marin... calm. Surprised to see. Nice to see, though. Calm, and you'll see his new look, and he does look like Ted Cruz. I put up a picture there, Ted Cruz. But I like poking fun. We're really, really good friends. And that carbon credits deal he's talking about is putting the most money they would put in that deal. He's opening it up to Curzio Research subscribers. So I'm going to send you a letter probably tomorrow with all the details. It's really amazing. Personally, I'm going to put at least $50,000, probably $100,000 if I can into this deal. And I want to be able to open it up again. It's going to be for accredited investors. But this, I really like the deal. I researched it, and I'm excited about it. So I wanted to, I asked if we can give it away to the Curzio Research subscribers. And he said, sure, not a problem, which he's not doing for everybody. So really, really cool. If you're interested in that, you're going to get a letter, learn more about that stock. You'll see a presentation on it. If not, it's okay. But it's something that I'm putting a lot of money in. Very interested. Remember, I don't get paid for doing it. I don't get paid for recommending a stock. So we're independent, 100%. So when I'm putting my money into certain deals, in certain stocks we recommend, and these things come down, I'm getting hurt too. But we put our money where our mouth is, and that's one of the things we do at Curzio Research because a lot of our competitors don't allow their editors to buy those stocks. They'll tell you it's going to go up 20x, 50x, 100x, but Marin's putting a ton of money in it. I'm putting money in it, and we're behind it. So this isn't something. Well, we're pumping it because if you're saying something's going to go up 20x, and you're a newsletter writer, and you're not allowed to buy it, why would you give it to anyone? Why don't you save it for yourself? Well, you don't want those 2,000% returns? So for us, no BS here. And if you're interested, that's fine. If not, no worries. But I'm glad that's opened up. I love to share good ideas, which I don't do often from everybody, in terms of sending letters and stuff like that to subscribers. So if you're interested, you get a letter. You can click. If not, no worries. Now, a lot going on in the markets, as usual. And let's get to my buddy, Daniel. What's going on, buddy?
Frank Curzio, another wonderful Florida Wednesday, man.
I know. It's getting hot here, though, right? It's like 95-ish now.
Yeah, it is. It's getting hot, and more than that, it's getting more humid. But, hey, we're lucky here on the East because it at least cools off in the evenings, and there's always a breeze, so it's not miserable.
Yeah.
Feel sorry for us. We're on an island working our butts off. It's tough.
When we do this, Daniel, it's, I'll ask you, hey, what are some of the things that you saw that you want to talk about? And some of the things I'll know a lot about, some of the things you'll know a lot about. But one of the things that I wanted to talk about today, which caught my attention, and I'm not too sure if it caught your attention that much, is the Olympics, right? So you're looking at the CDC just added Japan to the do not travel list. And this is 2 months ahead of the Olympics. And this includes people who are vaccinated. We were told, if you get vaccinated, you're good, you're fine. We don't have to wear masks in America, right? No more, right? Indoors, if you got vaccinated, which nobody knows who got vaccinated, who didn't get vaccinated. It doesn't matter, but...
Not yet.
Not yet. Soon you will, vaccine passports. So for me, when I looked at this, I kind of thought it was insane. Because Japan just issued their highest alert on COVID. Their highest possible alert on COVID since last March.
Okay.
The highest alert. So it's the worst it's ever been. Be careful. And it's 2 months ahead of the Olympics. They built stadiums, the amount of money goes in, the economic benefits, all this. If they don't have the Olympics there, or if they see, a lot of these athletes not showing up, it's going to crush that economy because they put literally billions into it, right? That's what everyone does when they host the Olympics. They do it, start 5 years, 6 years in advance, and then they build this whole event up. Now, for some reason, the CDC said everyone in America, we're banning travel to Japan. So I was like, holy shit. I mean, what happened? Is it really bad there? Because I did statistics on all the countries and it's Europe and Italy and Germany and, even in China, US and stuff like that. Japan was handling the situation pretty good. So I started looking at statistics. And if you look at Malaysia, COVID is spreading very, very fast. One of the worst right now. There's 205 cases per every million people per day right now. That's more than India, actually. So India, which everyone's talking about how bad it is over there, it's 150 cases per million people. In the U.S. right now, as of the other day, latest statistics, we have around 75 cases per million. And we put out, right, CDC said no more masks. Everything is basically open, right? You almost could open up 100% right now. Pretty close unless, you're in some crazy areas in California and New York. 75 cases per million U.S., right? And we're okay, right? Vaccinated, go out, no mask, nothing. Japan, as of May 23rd, latest statistics, so we were 75 cases per million. They're seeing 39 new COVID-19 cases per million. So about half the U.S. 39. And the CDC just said, hey, we're banning, right? You're on a do not travel list. You can't go there. And for me, this is such a big story. One is I can't believe I'm sorry to say this. I'm going to curse, but the assholes in charge and how political this is. I mean, we're talking about lives, right? We're talking about, have you ever met, hey, Danny, have you ever met an Olympic athlete or anyone who's trained for the Olympics?
I don't believe so.
All right. I met a few, and you don't see them. You don't see them for a 3-year period. It's 12-hour training days at least. You're eating a certain way. Your whole life changes. You're grinding. You're not hanging out with your friends. 2 to 3 years easily to prepare to compete against the best in the world and get conditioned. And now, when it's 2 months away, you're ready to go, they're canceling it, or they're saying, they didn't cancel it yet, they're thinking about it, but they're saying, well, you can't fly to Japan because of political bullshit. And to me, that is a huge story where you're taking athletes who, we could easily say, hey, anyone in the U.S. goes to Japan has to be vaccinated, fine.
Wow. Hey.
Fine. No, but I'm just saying, every athlete, 100% of the athletes would get the vaccine opposed to not going to the Olympics.
Are they actually canceling it? Is that still a rumor? Or is it
not a rumor. They're talking about that in Japan right
They are
now.
talking about that. I am
that.
totally
the political
ignorant.
part, they're talking
I knew it was coming up because I saw the announcement you're talking about, and I've seen some pretty funny Olympic commercials as I've caught different short segments of TV here lately. So anyway, I'm sorry, but
no. It's just for me. I'm looking. It reminds me of Zika, where how many people didn't go to Olympics in Brazil because of Zika? I don't know how many people died of Zika. Hardly anybody. But you had Jordan Spieth, Jason Day, Rory McIlroy, a lot of golfers, a lot of tennis players. They said, hey, you know what? We're not going, and we're worried. And you know, you
Justin
look back.
Rose is okay with that because he's an Olympic gold medalist.
Who's that?
Justin Rose won that.
Yeah, Justin Rose won that.
So he's loving everybody staying on.
But you know, hard, even in golf, and these are professionals, but that's something that comes along every 4 years. You know, you had a shot, and because of something with Zeke, which doesn't even really exist too much anymore. And again, people are saying, well, you know, if your wife gets pregnant, then there's a risk or whatever, so maybe that's why they didn't go. But you know, when we look at statistics years later, we see it. Just like we're going to look at statistics of COVID, all the bullshit, that a lot of it was all fake and made up and garbage. We know the people we had to protect. It was very serious. We know that schools should have been open the whole time. Florida schools have been open for over a year. Same with Texas. And playing sports. And they're just opening up in some places right now, which is freaking insane when you look at statistics and kids. But to me, a major story where, you know, you're impacting people's lives. Like, this is what they've done for the last 3 years. This is all their life's about. And you're taking that away from them off of something that makes zero sense. I mean, 39 new COVID-19 cases per million. It's half of the U.S. Why did the CDC come out and put Japan on the ban list? I don't know. Maybe you could answer that for me. I mean, I have no idea.
I can't. No. No, I have nothing new on this. This has been politicized since the very get-go. We know that. Now with I know you touched on a little bit about maybe the virus started in a lab instead of transferring from a bat to human. Another Trump, see, I told you so, because he was a crazy idiot for even mentioning that, which he did several times, and now the mainstream media, including, I believe, the Washington Post, is coming around. Fauci, flip-flop, Fauci has gone back and forth on that. So, listen, this has been politicized like crazy. It is depressing. It is sad. I hope and pray that we get back to somewhat what they allow us peons to look at life as normal. But for all the athletes that work their butts off, it's just like, it's even more extent because the Olympics are less frequent. But this is why it was so heartbreaking for me to see him cancel the NCAA basketball tournament when they did. Because, again, for seniors, a lot of Olympic athletes, this is your last chance maybe. This happens once every 4 years, right? So that's a big deal. But, hey, the irony here is, from a macro picture, which I love to talk about, is that you can choose to ignore politics. You can choose to say, politicians, those guys are all scumbags. I hate them. I'm just going to ignore life. But the issue is, in reality, that if you choose to ignore politics and you get politics that are crazy and want to control every aspect of your life, they get voted in, and then this is the life you live. You maybe not have... Think about it. You might cancel. That's still on the table. You might cancel the Olympics 2 months ahead of time. Mm-hmm. That's pretty impressive.
With a vaccine rollout,
think of the power there
tremendously.
And it's all done under the blanket of hashtag we give a crap about you and we're saving lives and all that. It's all politicized, so we just try to make money off of it. Which, real quick, here's how you do it. If it did come from a lab, the coronavirus, Frank, is that an act of war?
It is an act of war, absolutely.
I don't know if it is or not. I'm just asking because why wouldn't you bring that up? And then if it is. Lockheed Martin.
Lockheed Martin. Yeah, boy, all defense companies. But I could tell you one thing. I mean, and I brought this up in the intro, how, you know, China had everyone was like, hey, let us help you out here, right? They're like, hey, you know what, let us help you out. You know, it's something new, never seen before. And they didn't let the CDC in. They didn't let the World Health Organization in. They didn't let anybody in. Right, so obviously you knew something was going on. Plus, they just contained it to Wuhan and said, okay, anyone in Wuhan can't go to China, but you could travel anywhere you want in the world, right? So, you know, when I look at this, is it an act of war? You could consider it an act of war. That's why I think they've been kind of not pushing that issue as much. I don't know what's going to happen, but I do know, if you really look at the details, this is a conspiracy theory. If not 90, it's 100% of the politicians are, you know, they're all on a take from China. Almost every single one of them. I mean, China, the amount of money that China spends to get what they want through our political system is unbelievably amazing. I mean, it's easily traceable, guys. So many people have written about this. I don't care what side you're on, but, you know, it's in the best interest. We saw that with Biden. We see Trump has hotels there. Listen, China is the growth engine of the world, and you want to have access to it, and China knows that. So if you're looking from our politicians looking to vote on anything like that, it's never going to happen. I mean, I don't think it's going to go any further than it's gone right now. There's not going to be investigations into it. There's going to be people shouting at the rooftops saying they want it. But in reality, you're not going to have it because it doesn't benefit a lot of our politicians, doesn't benefit them at all. And I don't know, but is it an act of war? Yeah, it could be considered an act of war. I think it's an act of war. But, you know, bottom line is, listen, China created a virus in order to what? Why did they create it for? What do you think? To kill people. I mean, why else would you create a virus like that could spread so fast in a lab? So if this is proven, then how could you not say it's an act of war, right?
Yeah, I mean that's an easy. It's going to be on the table, and you're going to see it in a lot of headlines, I believe, going forward. So, it'll cause volatility. We're going to have a lot more volatility in the markets for a number of different reasons. Inflation, we can get to that, but it's one of those things. Unfortunately, we have to wait and unfold and pay very little attention to as much as you can, because it's going to be very difficult to get the truth.
It will. I mean, I think that was really, and you're going to disagree.
Hell, Zero Hedge. I'm pretty sure Zero Hedge got banned from Twitter for running stories about that over a year ago.
Yeah,
and now every major newspaper is running them.
Yeah, which is
I don't know
crazy.
why Twitter isn't banning them, but maybe they had a come to Jesus moment.
I don't know.
Jack.
I could tell you that was really Trump's downfall, I think, when he really started going after China. I mean, you could say, well, immigration, the wall and stuff like that. The massive, all the investigation, everything went full straight. As soon as, that tariffs, and he's raising tariffs, and he's not letting China get away with anything. I mean, there had to be a massive change there, because the amount of money our politicians, guys, I mean, it's easily tracked, seriously, that they make from China is incredible. I mean, it's just incredible. So, you want to talk the good fight, and you want to say that, America's great. Listen, China knows exactly what they're doing. It's pretty scary right now. It's just... But I don't think you're going to see this come out to. It's never going to go that far. It won't go that far. It'll be punishment or whatever, but not seen as an act of war. But it should be seen as an act of war, since 3.5 million people have died because of this. 3.5 million people, and a lot of that could have been prevented if you just let people in China to study this virus, to see what it's all about. We could have stopped travel a lot earlier than that, months before. Yeah, but I don't know. It's just, it's crazy. But like I said, there's always ways to play it from a stock perspective when it comes to defense companies, everything. It's funny you said that. But another major story that came out today was, or this week, was Bitcoin going up and down, right? We've seen both sides on Twitter yell and stuff. I said a couple of tweets early in my intro. But I was just to see Ray Dalio come in and saying that he owns Bitcoin and talking favorably about, to the point, I think it was Ray Dalio, right? Daniel had said, I'd rather own Bitcoin than bonds? Yeah,
and that was by far the biggest takeaway for me with all the volatility and drama and stuff. We joked about, hey, somebody's going to make a major announcement. I don't want to go as far and say if Bridgewater, the hedge fund that he runs and started or has a major role in, actually bought it. I don't believe so yet, but he personally owns Bitcoin, which is a huge tip of the cap. I know everybody is caught up in Elon Musk tweets and Michael Saylor, and now they're talking with Bitcoin miners and kind of staving off. You got to give them credit, because Bitcoin is starting to play the political game of, you have to try to look forward and do some PR, some press control. So Elon Musk thinks he's the crypto god, self-anointed. Everybody has to have a huge ego in this business. So you want to go out there and say, hey, this is bad for the environment, because you've got to cover your butt on what a waste your Teslas are for the environment. And now Bitcoin and the miners, they get with two huge CEOs, Michael Saylor, MicroStrategy, and Elon Musk, and they start talking about, hey, we're going to be good for the environment. We're going to transition our power usage and all that. It's all BS in the big picture. So this is the perfect opportunity to use these headlines, if you're a believer in cryptocurrencies, to add to those positions, or at least initiate those positions, because governments can ruin cryptocurrency, but it'll be through taxes, and it'll be through conducting the argument in a way where it's harmful for you as an individual, in just like every other excuse they make. It's going to be better for you and better for society if they implement these rules. That's how they're going to do it, and they'll tax it out, not just shutting it down, although that is a risk with environmentalists.
Yeah, and guys, it wasn't the news out of China that crashed the markets. I mean, that's what was being reported. Listen, China banned crypto exchanges, alternative trading platforms in 2017. They came out, they put in more stringent rules in place 2019. And then, what was it, like a month or two ago, they said they're going to have their own digital currency. So, it's in their best interest to make sure that nobody else could do anything with digital security or currency in the entire market, right? So there's no surprise there, but yet, people saying, well, what China news is terrible. Bitcoin, no one that owns Bitcoin is thought that China was going to be a huge growth engine for this. No, it's more about institutions here getting in. And it wasn't Elon Musk saying, oh, green energy, which, again, it's flip-flopping back and forth. And the fact that guy could send a tweet and move hundreds of billions of dollars in and out of a market and nobody says anything or is amazing to me. The reason is there's a ton of freaking leverage in this industry. There's a lot of kids that are leveraged 100 to 1, even more.
Yep.
And you just need a little bit of a decline, and that's what happened because these people like HODL, right? Hold on for dear life. Hold on. We're never. How many people have I talked to? Have you talked? I'm holding on to this for dear, like never ever selling. Someone freaking sold.
Yeah,
you talk about $1 trillion in market cap, $1 trillion in market cap wiped out in weeks. Somebody was selling. And a lot of that is leverage. And it's a good thing when you see some of the leverage comes out because a lot of these guys are going to tighten up their policies, even when they're offering, just high interest on holding some of these tokens, which is, the new craze out there that everybody's doing. And they're going to dial back. It's going to be more regulation, the good type of regulation where, you have to pay taxes on your gains and stuff like that. That's going to be good because that's going to allow this to scale where I got to tell you, Daniel, in this industry, I mean, you're looking at Coinbase, right? Coinbase came out. And now Coinbase said they're going to trade, Dogecoin is going to be on that platform. But there's at least, if there's like 60, 70, I don't know how many there are right now, 70, whatever there is, that are trading on Coinbase, I can't find information on like probably 70% of those. Like, I don't know what the coin represents. I don't know. You won't even find the management team. You might find a LinkedIn with like a couple of names on it. You don't know how many tokens, like they say how many tokens are outstanding. You really don't know, though. You don't know anything, right? You don't know the cash balance. You don't know the business model. You're not getting equity. They don't have to report anything. But Coinbase is under the SEC now. It's a publicly traded company.
Yep.
So something's got to break there. They either have to come out with more regulation and say, hey, we need companies. That's one of the reasons why with our CEO token, guys, we're getting our financials audited. This way we have transparency, and it's going to result in if our company does well, which are doing well now and growing, that we will get institutions to invest. That's how I'm looking at it right now. So going through that process should be done in a couple of weeks. It was a very long process and hard. Tough first time we're doing it. But, that's going to provide transparency. But you need that transparency. I'm just surprised that, Coinbase is able to trade some of these. Like, who do we have? Elon Musk. All right. Basically saying this is a scam or a fake. You have Mark Cuban saying it's a scam or a fake. You have all these people coming out basically a scam or a fake. And now all these platforms are trading this fake bullshit security on their platforms, which is kind of crazy when you think about it, right? I mean, imagine doing that.
Oh, it's absolutely. Yeah, I mean, it's crazy. I totally get your point. There will be more regulation, no doubt. Goldman Sachs had a good report. They were interviewing somebody that used to work with John Clayton when he was over the SEC. I don't have his name right in front of me, but no doubt there'll be more regulation of some sort with all this. How they get around it right now, I don't know, but I'm going to suspect, and this is a guess. Listen, everybody knows what Dogecoin is. If you're buying Dogecoin because you think it's fundamental or you want to look into any business aspect, if there is one, or any detail, you're not paying attention, and really there's no way that that's the market for that. So maybe they get around it because there's enough information publicly to point to know what it is. And then the also thing is hey, even if cigarettes are bad for you, you can sell them. So people like to gamble. People like to speculate. It's another form of Vegas in that sense. So that doesn't bother me near as much as it bothers you. But it is a good question from the SEC. I don't know what their feeling is on that, but no doubt they will put their hand in the cookie jar and make some new rules going forward that all of us have to abide by.
Yeah, no, I agree, but we need more regulation, we need more transparency. That's how you're really, really going to scale this thing. But the reason why it came down is there's a lot of leverage that came out of the market, guys. It wasn't because of China. I mean, nobody had China as a catalyst for Bitcoin going 100,000 or whatever. But we'll see how this plays out. Less leverage in the market's usually good, and we'll see how it builds back up. But we did see for me, I think it's a positive sign when you're seeing Ray Dalio come in and say, "Hey, I bought." Yeah,
I don't know how you wouldn't. How you can take that anything, granted, he's a multi-billionaire. So even if he put $1 billion in it and lost it, he wouldn't, be hurting. However, it's a tip of the cap. He's one of the smartest, best thinkers because he's willing to change his mind. He has changed his mind when the facts change. From an investing standpoint, if you think Bitcoin's going away, fine. You're not going to pay attention. I'm not going to convince you, and I'm not intended to convince you of anything. If you don't think it's going away, though, here's how you play it. When you see massive volatility like this, you want to look at, and just like Frank brought up, Coinbase. Coinbase should be reaping the benefits from all the trading activity and volumes going on because they charge fees, they can charge services for different things, they list new coins. That'll gain more users and more attention. The other side to that is they're not the only game in town. Galaxy Digital should be reaping the rewards right now. When prices fall, their private asset management can take deals, invest in new startups, invest in new cryptocurrencies. get coins, et cetera, et cetera. Think private equity, think Wall Street, just in crypto. They also do trading. This is from Cointelegraph, good website that we constantly check. Voyager Digital, the Canadian trading and yield app. So like you talked about, Frank, no doubt they help fuel the leverage in this because they offer yields and different things on tokens. But during the crazy, they just reported, so they haven't even really benefited a whole lot from this, just in general. I'm talking about the recent volatility. Their third quarter results jumped 16x. Revenue went to $60 million from $3.5 million, Frank. Now, that is because more people have interest, more people are doing it. But my point is that when you see huge volume, you want to look at who's benefiting from that. And yes, Galaxy Digital price has fallen, Voyager Digital has fallen, Coinbase has fallen. But if you're just looking at the present price, then you're not investing. You're just emotional, you're like a wave out in the ocean. So think of who's going to benefit from the volatility. It should be the three we just talked about. And if you're not, if you have positions, either add to them or look to hold them, but know why you own it and know who would benefit from the environment that we're experiencing.
No, that's well said. That's well said. And I'm actually pulling up something, so I'll explain it since if you're watching this through YouTube, you'll see it. If not, I'll explain it. But if you go to CoinMarketCap, Daniel, and you look at, it's really cool. It gives you, just all the tokens and market cap, circulating supply and stuff. But at the top of the page, and I'm going to show that now on our YouTube page, they have the 24-hour volume of all of cryptos, right? So right now the entire market cap's 1.7 trillion, and it was 1.5. It came back to 1.7 trillion. It was 2.5 before the crash, but the volume right now, 24 hours, is about 170. But if you look at the volume and just take the last 3 months, right? So if you look at the volume of all cryptocurrencies, it's right at the top. If you click it, you see like 130, 150. It hit at 200 a few times, and then April. And then all of a sudden, when you look at May, it's 200, 250, 260, 300. It hit 400 one day. This is $400 billion in total trading volume in a 24-hour period, right? And it's almost constant where it's, here's another $400 day, which was Thursday. This is May 20th, right? So May 19th, $400 billion. Right? So this is the volume. This is a trading back and forth. Almost every single day after that is over 200 billion. And what does that mean? It means that these companies, all the ones that you just mentioned, they make more money the more people trade. And you're seeing more volume. So these guys are going to see their earnings skyrocket next quarter. And people look at it and say, well, Bitcoin's down. You're still seeing a ton of people trade this market, buying and selling, buying and selling. That's why Goldman Sachs recommended it. We're up a ton on it. It's volatility and liquidity. If you have those two things, the investment banks, especially when you look at Morgan Stanley, Goldman Sachs especially, are going to benefit from it. That's why they're blowing out the earnings by like whatever. I think if they're supposed to report $5, it was like $12 or something, whatever it was for the quarter, record, because you're seeing more money being injected to the system constantly. More people have more money than ever, and you're seeing more and more and more trading. That's good for you. That's why Coinbase was over. I forgot, did Coinbase touch 400? I know it was over 300.
I don't know. Yeah, when it IPO'd, I'm not sure. I know it was over 3.
And then it came back down, and then now it went down to like 210 or something like that. And then Goldman came out. Remember, they came out a month ago, and after a month, all these investment firms that were part of that offering are going to come out and research on it, and they're going to have to put a buy rating on it because the thing is down so much, right? A lot of their clients are in it. And we saw Goldman Sachs come out and say, hey, it's worth over $300. And that was the first one. You're going to see like 3 or 4 more positive reports come out. Listen, that's what moves markets. I'm just telling you how the markets work. They're going to come out and say, this is a buy and have a 350 target price. Well, it's at 220, but it's starting to move back up now because you're seeing Bitcoin kind of leveling out here. You're seeing buying coming in at 35,000 levels at 40,000. I don't know where it's going lower or higher, but what I do know is you're still seeing a massive amount of trading, and a lot of that trading takes place on Coinbase. They're still, one of the biggest next to Binance. And those earnings are going to explode. They blew out the numbers last time, and they reported them ahead of time, which was smart before before they went public, which I love that they did that. These numbers are going to be better than those numbers, and those numbers blew them out. So it will be interesting, Daniel. But yeah, it's a good point that you brought up. Now, one of the last thing I want to talk about is one of the guys that we follow, Dave Rosenberg, economist. I would say he's kind of a perma bear. Would you say that or no? I always felt like he was a perma bear for many years. He always thought the market was going to come down, and I stopped following him. But he's very, very smart when it comes to inflationary data and reporting data. But there's a difference between being smart reporting data and understanding and making money off of it. There's a massive, massive, massive difference between that. And I think, for me, David Tepper is the greatest in the world that does that. He could interpret data and know exactly how to make money. I see so many guys and economists like interpret data, and he was completely, based on totally negative on stocks.
Right, just use it to kind of back up whatever argument you already had.
Yeah, exactly. It's like someone saying, Tesla's overvalued at 200, which it was, 300, 400, 500, 600, 700. Yeah, you're right. If you look at every metric, it's overvalued, but the stock is up 300% right in your face. So it's how do you make money off of that? And that's, I never got that from him, but he's someone I follow, and he's coming out saying with a lot of good statistics saying that this inflation, and he's agreeing with the Fed, that it's going to be transitory. It's going to be brief, this massive inflation. So what are your thoughts on that?
Yeah, this piece jumped out at me. I thought this was fantastic. He wrote a piece with Macro Voices, inflationary will be transitory, and then Zero Hedge, which is a wonderful libertarian financial website, ran it with a quote that says, a whole bunch of people are really, really wrong about inflation. And I'm paraphrasing here, of course, because Frank and I have been talking on the podcast a lot about inflation, and to keep it simple, what he's explaining is that it's more of a pendulum swinging because of he expects more government policies to kind of negate or draw back. So what we've been talking about for several weeks and warning investors and also positioning portfolios to benefit from this, higher prices across the board, is that when you inject money into the economy, when you put it, just like the government is putting trillions, world governments around, but our government, trillions and trillions of dollars into the hands of the consumers like us running around the economy, that causes prices to go up. Now, on September 6th, Frank, what happens? The unemployment extra benefits supposedly run out from the government level. That's a $300 a week bonus right now. Over 20 states, I believe now, are doing away with that, mostly Republican, if not all Republican, to try to encourage people to go back to work. So what Rosenberg is saying is, hey, we're getting a lot of statistics right now that are showing inflation, no doubt. However, he thinks that because of dramatic increases in exports from Korea and Taiwan, which are critical sources for semiconductors, and he points to how container ships are, quote, filled to the brim and in holding patterns. So think of airplanes, Frank. When you look out the window and you're circling your airport and you see 3 other airplanes, everybody's waiting in line. Well, picture that on the ocean, because in LA and Long Beach, which are 2 of the busiest ports in our country, you have container ships filled to the brim, like he said. So this whole supply crunch is happening right now. Is it going away tomorrow or next quarter? No, but he expects it. Oh, we're getting spied on.
That was actually serious. I'm going to keep that. I'm not. We really don't edit anything in these podcasts, but that's an interesting question.
Hopefully our ratings are going up through the roof because we're getting spied on. So he expects basically the supply chain to kind of level out, and as we get towards the end of the year, if the government does stop, now there's a whole bunch of options that could happen, because I personally think that you're going to see headlines and arguments made in the government about extending those benefits or universal basic income or something to keep injecting money into the hands of the people. I don't think that should happen, but I think that that's going to be a conversation. However, like Rosenberg points to, if you have reopening of the economies and you have less money going into the hands from the government, that short term will show a balance of inflation. And I don't think the Fed can control inflation. I know that they can't if you just pay attention to history. However, they can influence it over a short-term time period. And remember, Frank, we've talked about this a lot. What governments look at and view inflation as and what the reality of inflation is are 2 totally different things. So if they can pull back adding money to the economy at the same time people are going back to work, if you pull money out of the economy, what happens? If you quit giving people free money, demand is going to go down because they're going to have less money to spend. That's not rocket science. So you pull some money out of the economy or stop putting money into the economy at the rate you are. You couple that with people going back to work and economies opening up, that could level off some of that. And I think that's a great point. What would happen if the market gets wind of solid data like that? Stocks could continue to move higher and higher to new all-time highs.
You know what? I'm just writing down a point here because I'm listening to you. And for me, I always love listening to people who have a different opinion than me. And here's why, and I respect, but here's why he's dead wrong. Okay, I'm going to make it simple for you. And I felt like he's been dead wrong for a while. And again, I love the statistics. I love what he's saying, right? Because he said it's probably too much this is what he tweets. It's probably too much to expect the talking heads on TV to make a differentiation between a pandemic, reopening price level adjustment, and lasting inflation. And he says treasuries are selling off in the FOMC minutes without realizing that since that meeting, we have seen duds in the payroll, retail sales, and housing data. Somehow, lost in the inflation hype is a city economic surprise index sliding to 11-month lows. Okay, so when I take everything, and even what you said, right, when you're like, hey, you're going to take this, you're not going to pay people to free money anymore, right? So there's less money going into the market. Stop putting money into the market. Why is that stopping? You're just talking about one small facet of the market where, okay, you're not going to pay these people anymore. Big deal. You know what? They're going to go back to work. And how are they going back to work? All these companies are paying them incentives and raising their pay, right? So that's more money that's going to be made in their pocket or that they're going to spend. You're talking about the supply issues are going to go away. They're not going to go away to 2022 at least. The reason why we have that massive imbalance is because there's not enough goods on the market. Everybody wants to buy stuff, right? So you're looking you're looking at retail sales. Why was it a dud? Go to Best Buy. There's nothing on the shelves. Yeah. People aren't buying anything because there's nothing there. I would have bought a car last month when I started looking. I couldn't buy a car. Now I have to get a used car, ship in here, and then I got to go pick it up in a couple of days. People are trying to buy and they can't. So you're looking at why home values are going through the roof still, up tremendously. And I think it went up like 17% year over year, which is insane. But why is that number latest housing data? Because housing prices are going higher and higher and higher and higher and higher. They keep going higher, right? So of course, you're seeing a little demand come off the market just a little bit, but it's still pretty high. But when I look at what he's saying, where he says less money going into the market, I can't see that argument. I mean, there's more money going into the market as long as interest rates stay low, which the Fed said they're going to do. They're going to continue to buy bonds, so that money's staying into the market. And the money he's talking about where we're getting rid of unemployment benefits, that's going to force these people to go back to work, and they're going to be making a lot of money going back to work, more money than they made when they didn't. So
in a lot of cases, yeah.
In a lot of cases, because you're seeing a massive labor shortage, and then what's going to happen? I mean, you're looking at people trying to buy. They're still trying to buy stuff. But they can't buy stuff because it's 3 months, 6 months, 9 months. I ordered a mattress. I need a mattress. I have the worst mattress ever. I ordered it a month and a half ago, and they said it's going to take 2 months. I just emailed them and said, hey, could you give me an update? Because I ordered a Peloton. It took like 3 months. But every week they were like, hey, this is what's going on. They let me know. They haven't even answered my email, nothing. I'm like, I bought a really good bed because I need it because I have back problems, and this bed is terrible, but it's we're still waiting for it and nothing. I'm not even getting. So this is not going away anytime soon. And to think, well, hey, money's coming out of the market now, and wait, the unemployment rate went higher. It went higher because people are home right now and they're getting paid more money than to work. But what's going to happen? You're going to remove those benefits. Now they're going to go back to work, and they're going to make higher wages than they did when they were working. It's good. Definitely going to be. Everybody is raising prices tremendously across the board. Every company, guys. I track this stuff. If you look at any single company, listen to any conference call, every McDonald's, Chipotle, everybody, Coca-Cola, everybody's raising prices. You know it. You see it everywhere. So the fact that people think this is going to be transitory, I don't get it. I don't buy that argument. I'm sorry. I mean, look, he's brilliant. He's a brilliant economist, and I love seeing the other side, right, or a different opinion. And he could end up being right. If he's right, this market's going to soar because you get all this money coming into the market. People are more richer today than they've ever been. People are going to spend money on goods. Yes, I know there's a massive gap, but we're talking about the people who spend money here, right? This is about the economy. You're going to see more and more people buying stuff. You're seeing it right now. They're buying houses. They're buying everything. You're seeing bars crowded. Everything's crowded. People are spending money. That is not going away anytime soon. And the fact that the Fed is like, hey, you know what? Unemployment rate went up, which is a surprise. So you know what? Since that's our mandate now, it's not inflation anymore, right? Well above their inflationary target. It's getting that unemployment rate to pre-COVID levels. And when I look at that, that's not happening. That's not happening. It's not going to happen. There's just too many people at home, too many people that even that got the taste of staying home, that are doing other jobs from home. You're not going to get that unemployment rate back down to 3.5, whatever, 3.7%, whatever it was. So when I look at his argument, yes, I'm expecting retail sales to be a dud because you can't buy anything right now. It's very difficult to buy stuff. Housing data, of course, you're seeing home price go higher and higher and higher. And you're saying, well, that's going to result in a slowdown. Is it? Because if interest rates stay low, which you're saying, they're probably going to stay low, and they're still kind of low, and mortgage rates are low, you're going to continue to see people buying homes and assets. I mean, you're still seeing assets across the board go higher, even in stocks. Now they're coming back, right? So, yeah, and he's talking about the payroll. Again, all those arguments, I just don't see. Could I be wrong? Absolutely. And he could be right. And this could be transitory. I just don't buy that argument. And I'll be honest with you, I hope he's right, Daniel. Because if he's right, people are going to make an absolute fortune, especially in their portfolios, especially in the markets. You're going to see technology companies bounce back tremendously. You're going to see profits surge. It means that all this pricing power was easily passed off. And these companies are going to generate profits beyond belief, right? Even though we have tax cuts coming up, for corporate taxes. But if he is right and it's transitory, then, and it's going to be brief. I don't know what brief is, by the way. I wish he defined it, because this year, forget it. The prices are going to go through the roof this year. I mean, the supply chain and chip shortage is not going away anytime soon. I just, again, I don't buy it. I hope he's right, because if he's not right, we're going to be in a recession next year. We're going to be forced to raise rates if we see inflation go out of control. And right now, that's a very real possibility where interest rates are, and the fact that the Fed's not taking their foot off the pedal. That's just my opinion. Yeah, I could be wrong. Again, I hope I'm wrong, because it's going to hurt a lot of people. If I'm right.
I mean, the big takeaway here is it all comes down to timing and perception. So I agree with both of you guys. What you're saying, people are going to go back to work.
You can't. You got to agree.
Well, the easy answer is you don't have to take a stance here, because you can make money. I mean, the easy answer is be diversified. So if you're diversified, you're fine. You're going to have some things bounce around. I don't need to take a side, because you don't want to load up. I don't think you should anyway, and I'm not going to load up on one side or the other. Timing and perception, because to your point, people go on unemployment benefits, have to go out back to work. Let's say they're making more money. That doesn't happen overnight. And so if that takes a quarter or 2 quarters to kind of get into place, that's going to reflect in those statistics. And that's my point. So as long as the government's looking at stats, and like Rick Santelli made a great point a couple weeks ago, once you get to that year-over-year point, if it's not outrageous, then you really have to pay attention, because the new normal for us as consumers in reality, our prices are going higher, no doubt. But if that doesn't change the dynamic of the Fed actions, that's completely different than what could happen in the stock market prices. So, and to point to a realistic thing on that, Cracker Barrel, Frank, do you like Cracker Barrel?
Yes.
I really like
Sometimes I like Cracker Barrel, right? I mean, it's a bad...
Get off the fence. What do you mean sometimes? You either like it or you don't.
You know why I don't like it? Because I'm getting in very, very good shape now, and you can see just by looking around that crowd who eats there, and it's good, and you get big portions, and it is nice.
Hey,
and
moderation, my friend. Just because other people may or may not do it,
how
doesn't
could
mean
you eat one pancake if you go there for breakfast?
You eat one stack.
One stack. It's a lot of...
Well, you don't do it every day. Anyway, they're delicious. Their biscuits are good too, and their coffee's good.
Biscuits, yeah.
Anyway, I like it. I like the atmosphere. I'm not a knick-knack. I don't buy all the crap, but it's fun to look around and see what that kind of stuff is. Back to this. They're a strong brand, so you always ought to follow their earnings, because, and I believe, well, I won't even get into that. The big takeaway here is they saw 2.8% step up in prices in Q3. They expect 5% more increases in commodity in Q4 due to pork prices moving higher. Cracker Barrel, are going to increase prices by another 3% in Q4. The bump will not be enough to offset rising prices. So yes, they have pricing power, but they're not going to raise prices so much to offset all of theirs. So you have to look at margins. They can cut costs everywhere else. To your point, Cracker Barrel has already raised prices. They're going to raise prices again in Q4 by 3%. Let's say everybody's right and you get these year-over-year or these inflations that look temporary. Is Cracker Barrel going to lower prices by 3% Q1 or Q2 of next year?
No. Doubtful. Ever lowers prices.
Very rarely.
Yeah.
So that's the reality. That's what the toughest part is. You're going to look at data that's going to scream inflation. Reality is, but how is that going to dictate the stock price and all that kind of stuff? So that's something to take away. I hope that helps and kind of backs up our points, not makes us look like we're on the fence. But that's just the reality of real private companies, publicly traded companies out there working versus the quote unquote smartest guys in the rooms that are looking at data.
Yeah, and I'm a big fan of David Rosenberg, even though I disagree with him, and on this particular issue, I think he's kind of contradicting himself also, because I know that he was bearish, and he's an economist, but he was bearish on the overall markets for a while, at least from when I was reading him and stuff for a while, but you can't be bearish on the markets and say that inflation is transitory, because if it's not, you're going to see growth stocks. You're going to get the market very expensive again, and you're going to see it's expensive now, but it's even going to get more expensive as, growth stocks come into favor again. Now, but he's also talking about how there's a rotation of value into growth, which we're seeing. So if we're not seeing inflation, you really think it's transitory, I mean, maybe people are just trading it this way, but I mean, look at reopen stocks. I mean, those stocks are still going through the roof. The cyclical names, right? Those do well during inflationary times, especially during the early stages. Materials, commodities still going through the roof. That tells me it's an inflationary environment. The fact you think it's transitory, maybe people are just trading it for a couple of months, but he's going to have to become, if that's his thesis, he should be telling everyone to buy the FANG stocks, technology stocks, and growth stocks hand over fist right now if he really believes it's transitory. And I would love to debate him on that and talk to him because, I'm sure he'll educate me on some things. He's a brilliant guy and I respect him a lot. But and I think it would be a healthy debate. The bottom line is it gets to the truth, right? And whatever happens, we come back and talk about it and say, hey, you know what? I was wrong here. I was wrong here. He was wrong. He was right. That's how we get smarter. That's how we get better. And I would love to get him on the podcast. I'll reach out to him. I do follow him. I think you should follow him also on Twitter, because he does provide really, really good information and good statistics, which are not that easy to find these days. So, Daniel, wow. That's such a list a little bit longer than expected, right? I mean,
yeah, we went real long. We need to wrap this up.
All right, man. So
sorry, Garrett.
Yeah, I know. The guy who tapes this is probably like, come on, I'm on a clock here. The behind the scenes Garrett, who's awesome, who does all this stuff and makes it look great, and the guy behind the scenes. So anyway, Daniel, thank you so much for coming on again. Appreciate it. Love having you, getting great feedback from it, that we could cover these topics and stuff. So I really appreciate it, buddy.
All right. Cheers, everyone.
All right, guys. And that's it for me. So I will be sending you that thing from Marin. If you're interested, that's fine. But again, I'm putting a lot of money into it, something I believe in. And I always want to, that's what a Curzio One membership is about, where, I'm sharing a lot of like these small deals that we don't get huge deals that I get from very, very good sources that you can get into through Curzio One. And we've gotten into 3 of those deals already, which is really cool. But when I say deals, I think that are very favorable, to have favorable risk rewards for people that are looking to take on risk, I pass it on to you. I don't do it often, but I really like this deal, and I like what Marin's doing with this stock. Plus, I really love the sector he's investing in because it is going to go through the absolute roof of carbon credits. No matter what you think about it, believe in it, or whatever, that industry is here. It's going to be enormous, and this is one of the ways to play it, which is really, really cool. So, again, I'll send the email out to you by tomorrow, and if you're interested, if not, no worries. But that's it for me. It's it for Daniel. Thank you so much for listening. Enjoy the long weekend, Memorial Day. Have a lot of fun with your families. Barbecue. I always say this, don't talk politics. Just have a good time. Enjoy it. It's really, really cool. And I'm glad that everything's opened up. And you're probably not going to have to wear a mask if you live probably about 80% of places in America. Go have fun. Have a great time. And I'll see you guys in 7 days. Take care.